This is Scott Becker with the Becker Private Equity and Business Podcast. Here are 9 of the stories that we're following today, and maybe we'll call this Macy's closing 150 stores plus 8 other stories that we're following. So the first story we'll call out is Macy's, who he has this incredible real estate portfolio that's probably worth as much as their company, has announced that they're going to close 150 stores. That to me seems like a ton of stores. It's not like I see Macy's on every corner, so I don't know what that leaves them with in terms of stores, but that seems like a lot of stores. They're going to try to do this in the next couple of years and close what they call unproductive stores. They've committed they're going to keep the New York store open, which is one of their flagship stores on really valuable real estate, but may close the very long-term store in San Francisco, as that city continues to have troubles. They're intended to close 50 this year and another 100 over the next couple of years. Second, Beyond Meat, and what's become sort of fascinating in terms of corporate CEO leadership, they aggressively announced they're going to cut costs. Their stock has been way down. This drove their stock up pre-market today by 57%. Again, it speaks to a couple different things, this incredible volatility in the market and how much Wall Street rewards CEOs as they try to get their P&Ls back in line. Third, the market's point down today, not as bad as they were early this morning. And a lot of this is waiting for the inflation data to come out Thursday, the PC index. And so we'll see how that goes. And, people are expecting that it'll still be down year over year, but a little bit up for the month. And so there's a little bit of concern about what that's going to look like. Fourth, again, speaking to stock volatility, Palantir Technologies is up 42% year to date. And so you wish you would have bet on Palantir. You wish you would have bet on Bitcoin. The flip side is our fifth story is Rivian is now down 52% year to date. That's one of the electric vehicle makers, and that market's getting hurt badly right now. Lucid's way down. Tesla's down 20% year to date, and Rivian's now down 52% year to date. It's not going well. The sixth story we found today, the 1-year Treasury is at 5.1%, the 2 years at 4.7%. Those are traditionally extremely attractive numbers for savers. So lots of people continue to pile money into treasuries. At some point, people have to go longer in those treasuries. But right now, the 5.1% for 1 year is so rewarding as long as the U.S. can keep its stat picture in line and not go broke itself. Eighth, as I noted a moment ago, Bitcoin has surged back to nearly $60,000, which is an insane amount. I sold out, of course, at a huge loss a long time ago. Woulda, shoulda, coulda, should have held on to that. It is what it is. Ninth, oil has also surged back to almost $80 a barrel. We'll start to see that at a pump shortly, I'm afraid. A couple other notes that we're following in the healthcare sector. Albert Einstein College of Medicine received a $1 billion gift to provide for free tuition for students, met with huge applause. That was given by the family that was an early Berkshire Hathaway and Warren Buffett investor. Hats off to them and to that gift. Second, the Ad Council has raised $10 million in hospital commitments against gun violence to try and propagate against gun violence. Mike Dowling, the remarkable leader of Northwell Health, a big part of that. And finally, third, the Department of Justice keeps on getting more and more active in going after antitrust suits and investigations. Most recently, they announced investigations likely to start against Apple, but also against United Optum in the healthcare sector, a fascinating story to watch there. Finally, the last PS I'll say is Apple remains down 5% year to date. That's been sort of on a nowhere but up for years and years and years now, softening some. All these different volatilities in stocks gives further credence to the concept. It is very hard to be an individual stock picker. That's why most of us rely on index funds, or not most of us, but more and more people rely on index funds. It's very hard to pick which stock's going to go up, like Palantir and NVIDIA has, which is going to go down, like Rivian has and Apple has this year. It's just very hard to pick winners and losers, because most of us invest in the index and get the broad market. Separate podcast this morning or yesterday on the importance of emergency funds for families and companies and nations. Also, similarly, the story this morning, different podcast, the Becker Private Equity Podcast, on the importance of the clarity of goals in what you're trying to accomplish. Thank you for listening to the Becker Private Equity Business Podcast, and thank you, as always, to our wonderful producer, Chanel Bunger. Chanel, thank you very much.